Good afternoon. Welcome to this day's event. My name is Maria Demeritis. I am the Deputy Director of Bruegel. And today I'm joined by my panelists to discuss the role of promotional banks in helping the recovery, the COVID recovery, and also beyond the COVID recovery, the green transition. I have a set of very distinguished guests today that represent different walks of life when it comes to promotional banks. I'm very delighted to welcome Sophie Barbier, who is the Director of European Affairs in the Caisse de dépôt et consignation in France. Welcome, Sophie, and thank you for joining us. I have Lucinio Munoz, who is the director of Eco Foundation in Spain. From his perspective, the Spanish perspective, he will be joining us to talk about the issue. And then finally, a warm welcome also to Ricardo Mourinho, who is the vice president of the EIB, and he will bring now beyond the national perspective, also the multilateral perspective, multiforal perspective on what promotional banks, development banks can actually do. Thank you all for joining us. We are really delighted to have you. We're not quite in the post-recovery, post-COVID world, I'm afraid. Here in Belgium, we've taken new measures that go perhaps in the opposite direction in terms of, not quite shutting the economy. I don't think we can afford to do that anymore, but certainly in restricting mobility as the numbers of COVID going up. But I think it's fair to say that we really need to think about the recovery now taking place and sustaining it, given that we have had a shock, a rather prolonged shock for the past year and a half. And with that, the role of all the stakeholders in the economy is very cut out for them. And the promotional banks have a very important role to play in terms of stimulating the investment environment, both from the public side, but also the public side, to kickstart and sustain the recovery. So what I would like to ask as a first round, and before that, let me remind our audience that we will be taking questions from you. So please log into Slido, slido.org, and typing on the hashtag tag recovery, where you can pose your question. I will be monitoring those questions and try to weave them into the conversation. So please feel free to do that. So I will ask first my panelists from the national side to tell us their take on the exact role that they think their institutions should play in this recovery and financing the green transition. And, what are you specifically doing in this context? Before I give the floor also to Ricardo to give us the EIB's perspective. So if I may ask Sophie to start first for maybe 3 to 5 minutes for your initial comments. Thank you, Sophie.
Thank you, Maria, and thank you for inviting me to participate in this roundtable. Maybe before answering your question, I would like to highlight 3 issues related to the financing of recovery and the green transition. First, faced with this crisis of an unprecedented magnitude, public authorities launched massive recovery plans and put a lot of money on the table, 750 billion euros for Next Generation EU at the European level, and to take the example of France, 100 billion euro for France Relance and 40 additional billion for France 2030. So I think that the first question is, how is it possible to invest so much money over a relatively short period of time in an economy still disorganized and with economic agents reluctant to take on risks due to very high uncertainty? Secondly, as President von der Leyen put it in her State of the Union speech, this is a matter of investing in both short-term recovery, but also long-term prosperity. And recovery plans are also there to prepare for the future, to build up a more sustainable world. So the second question is also how Can you invest in a more sustainable way? How can you accelerate the green transition? How can you channel all this money towards green or greener projects? My third point would be considering this time the investment needs related to the green transition. We can see that the recovery plans are not so massive. On the contrary, they can appear as clearly limited. If I take the example of France once more, additional investments necessary for the green transition consistent with the Paris Agreement, it would reach 50 to 80 billion euros per year between 2023 and 2020 until 2023, and even more after 2023. So in this respect, I think that the third important question is how is it possible to leverage on public resources to finance the investment, the massive investment needs we face. So to put it in a nutshell, there is three questions: how to invest swiftly so much money, how can we select the best projects, and how can we leverage on public resources. And I think that promotional institutions, I come to your question, are part of the answer. First, how to invest swiftly so much money. Public authorities can rely on national promotional institutions to implement recovery plans, measures, because they are robust institutions. They are able to invest long-term and to take on risks on their balance sheet. To put it in a nutshell, they are able to act counter-cyclically and to finance projects when no other actors are willing or able to do so. Moreover, of course, they have developed tools such as loan programs or equity funds and so on, that can be mobilized to channel the money to the beneficiaries and to the projects on the field. And they have also a deep knowledge of local needs and partners. So I think that, not surprisingly, all over Europe, and national promotional institutions are playing a major part in the rollout of recovery plans at the European level and at the national one. At the European level, national promotional institutions are now, alongside the EIB, implementing partners of the Commission under InvestEU. And as you know, InvestEU is one of the main instruments put in place by the Commission to stimulate investment all over Europe. So Caisse des Dépôts, as well as many of its partners within the European Association of Long-Term Investors, LT, are currently elaborating financial instruments under the InvestEU Guarantee Fund. At the national level, I come back to France, of course, CDC supports the national plans by deploying some of its measures, but also by providing additional resources, for instance, in the tourism sector that was easily hit by the crisis. First question. The second one, how to select the best projects. Being long-term investors, national promotional institutions take into account long-term risks and returns when building their portfolio and selecting projects. And to do so, they carefully assess externalities attached to their investment decision, and especially environmental and social externalities. Besides being promotional, they adopt long-term strategies that integrate policy objectives. So as a consequence, national promotional institutions generally invest in projects that are not only financially sound, but or that have also a high environmental value. And just to illustrate this, I can quote the climate plan we launched in September 2020 with BPI France, our subsidiary. And the goal of this climate plan was to complement the French recovery plan by deploying 40 billion euros over 2020-2024 to finance the green transition. I could add something concerning technical assistance, because technical assistance is also something very important to get good projects, but I don't want to be too long, so maybe if there is any question, I will answer this. And maybe my last point, the last question I asked at the beginning, is how to leverage on the public money to accelerate the green transition. And I think that what you said, Maria, at the beginning is exact. NPBIs are the link between the private investors and the public money. And when an institution like CDC invests in equity or provide guarantee, then it is easier for private investors to invest also in the project, and so we can help build the tour de table for projects and make them alive. So, and I think this is particularly important for green projects that are often riskier projects. There too, I could give an illustration with a self-blending facility, for instance, with European grants and financial instruments provided by the partners such as CDC. It was possible to finance infrastructure projects in the field of green mobility with other private partners, of course, and it was very successful. And I think it's a very good illustration as well. So I tried to answer the initial question by giving you three types of roles for NPBIs in the present context.
Thank you. Sophie, you're muted now.
Yes.
Yeah. Okay, well, thank you. Listen, I actually, we're having some connection problems, I think, but I think I hope that our audience had got the gist of Sophie's intervention. Sophie, I would like to, in the second round, if you could give us, again, I think you said something, but I'm not sure how well understood this was. Some of the examples of projects that you're doing in France that could be of interest to other countries. But we can do this on the second round. Let me then first turn to Lucinio and ask Lucinio. I mean, there's a lot of things I'm sure that you agree with of the things that Sophie has said in terms of the role. Give us your perspective as well as one thing that is of relevance to Spain. Thank you, Lucinio.
Well, thanks very much. As you said before, as you've said, and we do agree, and I'm not going to repeat some of the things that Sophie has said. We share the objectives and the main things. So I'll just try to concentrate on this intervention about ECO's role and ECO's approach to sustainability and specifically to environmental issues. And well, of course, we've after these very tough years linked to the COVID economic crisis, and of course, ECO has integrated the sustainability as one of the main horizontal axis of its role. And in every aspect, we are a bank, and so we incorporated that into our governance. But we have incorporated that into our assets and liabilities. We have to just align our asset and liability sides. And in terms of our assets, ECO has prioritized the identification, financing, and measurement of the environment and social impact of its activity. And for instance, just to give you some, I think we have to put things in context. Just to give you an idea, ECO's balance, it's 34.5 billion euros, and we just and we our funding needs and annual funding needs are around 5 billion euros. And in 2020, just financing operations were approved for the amount of 2.7 billion euros linked to sustainable development projects. Just when I say sustainable development, I include just projects related to environment, environmental projects, green projects, and social financing. Social financing is a bit broader, and which has been particularly important with these COVID crisis. Just the environmental financing in 2020 was 1.14 billion euros. Just I'm talking about the ECO's own balance. Afterwards, as you all know, we manage state funds on the other side. But this on the asset side, basically just sustainability and the climate protection and environmental issues are embedded in the whole of our structure and our governance. And just on the asset side, we prioritize those projects. We identify, we try to measure the environmental impact, which is important. And on the liability side, I think we'll speak later about just the possibility of green bonds and how ECO can and the national promotional institutions can support the green bond markets. ECO has consolidated its role in Spain as a sustainable bond market and at the European level, and we've had so far 11 transactions in the sustainable bonds, out of which 3 have been green bonds. We've preceded our sovereign in the green bond markets. Usually agencies are faster to move, and perhaps we just face fewer restrictions than sovereigns, and we have so far three green bonds, and out of our total yearly financing, just as I said before, we have a financing needs, annual financial needs of about 5 billion euros. 20 to 25% are linked to sustainable bonds, sustainable finance. So we usually do one social bond and one green bond. That's the idea. We intend to do that in the future. So so far we've issued 1.5 billion euros in the green bond markets, and 4.05 billion in the sustainable bond markets. So just to summarize, we have integrated sustainability and environment in our own, just according to our own means, and as a bank in our governance and asset and liability side, and of course we are bound to support the government's plans for these international recovery and resilience plans. Just to give you an idea, Spain's national resilience, and I know you know that, Maria, because you've been studying those things, but 40% of the projects, plan and project of Spain's recovery and resilience plans are linked to environmental and green transition. So this is going to be it's not going to be just transitory fashion, just going to stay here. And ECO, as a national promotional institution, national promotional bank, will just act both with its own resources and both just on behalf of the state to support this market. You can just go into more details afterwards.
Yeah, thank you very much, Lucien. That's it's very clear. And in fact, I think we need to go a little bit more into this, how, if you can tell us a little bit more in the second round, exactly how you want to support the resilience fund. As you said, it's massive. The money that will go to Spain, allocated to Spain's 40% on green subjects, on green investments, how we can do that, and what is exactly the role that can be played in order to solve one of the two problems that I think Sophie very nicely summarized at the beginning, which is how do we invest swiftly, because there is an absorption rate That's what it points to. Can we absorb the funds and absorb them in identifying the best projects, right? But before we go there, and thank you also for raising the issue of the liabilities and the green bond market. I would like us to go back to that in a minute, how you can help facilitate the creation and the sustainability of the market, of the green bond market, as a way also of bringing in the private players, who of course we badly need for these investments. But before we go that, Ricardo, you will bring in your own views, of course, but also the sort of the European perspective of this, the coordinating role that the EIB can play by nature of its existence in terms of helping facilitate the green transition.
Well, thank you very much, Maria, for this invitation, and thanks to my colleagues for the very insightful views they have provided us. Yes, I think I'll start by agreeing with Sophie, saying that there was a very large-scale public response this time, and that's what makes this time really different from the previous crisis. The crisis is very different in nature. We are facing something that no doubt is exogenous, so there are no moral hazard considerations this time in the crisis, and this allowed also for a very different response that was by all institutions. At European level, we have approved law, even at the beginning in April 2020, a large-scale package. Out of this, EIB was responsible for EGF, for the Pan-European Guarantee Fund of 25 billion to mobilize 200 billion euros, and things are on the way to reach this amounts by utilizing guarantee. There was some delays for sure. By that time, we have also changed and adapted our eligibility and our framework for approving projects, making it more flexible. We have adopted a COVID-19 regime that allows for more flexibility, makes things faster, allow to repurpose already extended loans to address COVID issues. And this played also a very important role in supplying liquidity through the banks, the firms. At the same time, we have created in 2018 the Sustainability Awareness Bonds, and we have extended the eligibilities of the sub-bonds to the health sector. And that was something that became another important feature of the response of EIB to the crisis. All this was done in the context of close cooperation and joint projects with the national promotional banks, and ECO and the CDC were part of this joint collaboration. And I think it was it's very, very important. And we expect this now to continue for the recovery phase. And in the recovery phase, as mentioned, I think that the biggest challenge is, and of course that we are not out of the crisis yet. I would say that I expect us to be out of the most critical economic impact of the crisis after the lockdowns, after the severe stress. But firms are today weaker than what they were 2 years ago. They are more indebted with lower capital ratios, and this calls for a response from public authorities to fill this gap in the markets. Because that's, for in a nutshell, national promotional banks and banks like the European Investment Bank exist to create markets that do not exist before, and we did it with the green bond and now the sustainable awareness bond, but also to create markets when markets start to disappear. And that's what happened during the crisis, when private money runs away from risk and flies to safety. What the public entities can do is precisely to use the two productive factors, I used to call it like that by analogy, the production function type of thing, that are the two most important productive factors to innovation and to the green transition, which is patience, ability to extend loans, very long tenors, not having the shareholders asking for quick returns, and the fact that public entities have the governments behind, and governments are presumably infinitely lived agents, allow us to extend long tenors and wait for long cash flows in the long future. And second is risk-bearing capacity. And when risk increases, the role of public entities is not, of course, to take all the risks, to nationalize the economy. That's not the way to go. The way to go is to take part of the risks, such that the projects that in normal times are bankable remain bankable under stressful times, because the public entities take part of the risk, meaning that private entities can continue to finance the economy even in stressful times. And that's how I see this counter-cyclical role, because counter-cyclical role means do this in the low phase of the cycle, but also do the opposite on the up when the cycle moves up. And that's something that we need to bear in mind, is that this is not a new stance. This applies to, I would say, public investment banking, applies to monetary policy, applies to fiscal policy. So we need to be aware that the world we live is a crisis response world, and the world will not be zero interest rates forever with abundant liquidity, and because we know what are the impacts. So on the RRF, I would say that EIB and the national promotional banks can be very effective in managing the resources of the IIF in a way that delivers the highest impact. Because I see a lot of speech and a lot of discussion about RRF money and grants, and using grants to replace investment budget resources that were already allocated to some investments. If we do this, simply replacing budget resources by RRF grants, well, we can reduce debt and we can have lower deficits than otherwise for a period, but will not add nothing to the economy. And if we go this way, then we'll not address the investment gap. So to address the investment gap, we need to put RRF grants, maybe loans, on top of the existing budget resources. You need additionality. And that's a very important part of the thing. The second one is to ensure absorption. And many countries, and not only small countries, but also big countries, have such amount of resources that the absorption is not easy. To find enough pipeline of projects, the high quality projects, such that you take the best use of the money. And of course, the incentive, given that you have a limited time frame to adopt this, is to invest in projects that have, let's say, lower marginal returns to the capital. And that's something I think that EIB and the national promotional banks can, based on their experience, improve a lot. Bringing projects, high quality projects, ensure that the projects are properly defined, properly assessed, such that we are not spending money just for the sake of spending money on projects that we don't know the outcomes, but ensure that we spend money in good projects that deliver. And that's what we started already to do with Greece and with Italy, with mandates in the context of the RRF. And we are working with other member states, and more than happy to work with, of course, national promotional banks to be partners in implementing the RRF. I think that's a very important role that the promotional banks should have in bringing the best of the RRF money and using it in an efficient manner, because as already said by my two colleagues, the amount of RRF funds will not be enough. The estimated funding gap, the estimated investment gap is 650 billion euros per year to give reply to the climate transition and digital transition. So this is, of course, this needs to be met by public and private resources. The role of public is to bring the private resources. It's precisely to create conditions to crowd in private resources. And how do you crowd in? Sharing risk and putting a quality stamp. And the role that EIB has, and ECO and the CDC already have, when we support a project, we support projects that on average and expectedly are good projects that deliver. And this is the best guarantee that the private sector has to crowd in private funds into these projects. And that's pretty much, I guess, the biggest role we can have. Thank you.
Wonderful, Ricardo. Thank you so much also for broadening the discussion now and putting the role of promotional banks in the context of the recovery of the whole economy and other players. I think that was very useful in reminding us. And in fact, thank you for doing that, reminding us of the investment needs and how we're going to need all the powder that we can find to try and close these gaps and meet the ambitions. Because if you think about the climate ambitions, they are big and increasing. If link it to the outcome of the COP26, and you'll see that we're not there yet. We need to do a lot more to get to where we want to be. I think there's a lot I can say, actually, some of the things that you said, Ricardo, but perhaps I want to go straight into one question that I think is going to be very important in terms of guaranteeing that the investments we make really do help the green transition, and that is the taxonomy. I mean, how do we decide when something is green and when something is not? And I think through scale and through experience, as all three of you emphasize the role of experience that you play and your ability to absorb risks because you go for the long run, this is going to be crucial in helping us monitoring that actually the investments that we do are certainly green. And I think the make or fail of the RRF is going to be exactly on this when it comes to fulfilling green transitions. Have we really financed green investments, or have we financed brown investments? I'm putting it very black and white here, just to use two more colors. But I think it's so crucial that we identify the green investments correctly, because only then can you really also lever up on the private sector and have a way of accounting for the investments actually being green. I would be very interested in hearing your views on the taxonomy. How can you make sure that we have that? And importantly, is there a role for a European coordination when it comes to taxonomy? So there is no sense in France and Spain and Germany having their own views on or is there, on what constitutes green and what doesn't constitute green? We're talking about one climate. We must actually agree on what is green and what is not. But, and that alludes to what Ricardo said, not everybody has the capacity to be very strict on this. And, how do you deal with that? And perhaps I can come back to you, Sophie. Sophie, we have some problems with connection. If you could turn your camera off when you speak, that might be helpful in sort of at least listening to your intervention.
I try.
Yeah, that's better. Thank you.
Okay, thank you. Perfect. Thank you, Maria. Yes, indeed, we face major needs in the green sector, and I fully agree with you. Taxonomy is also a way to channel more investments towards green projects. And that's why, of course, Caisse des Dépôts, but also our partners within LT are really supporting the ambition of the European Commission in this field. I think that from our point of view, what is important to make sure that the taxonomy is really a success is that it is really adapted to small entities. That is to say, for instance, SMEs or small public entities, because we need a taxonomy that is real. We need to prevent greenwashing, and we need something that is really meaningful. And yes, you're right. There is certainly, it is important to share a common definition of what is green, but we consider that it is also important to adapt this definition to the entity that is under consideration. And from this point of view, we think that there are two important points. First of all is proportionality, and we think that the Commission knows it and shall really try to implement it when defining the standards. And the second important thing from this point of view is technical assistance. we think that if we want to implement taxonomy in good conditions, it will certainly be necessary to provide some assistance to the project owners to make sure that, and to the financial institutions to make sure that it is correctly implemented. I would like also to underline the fact that it is also important to strengthen the sustainable reporting framework to improve the quality and the comparability of sustainable information, and of course the access for investors to this information. And this is also a powerful tool to fight or to prevent greenwashing.
Wonderful. Thank you very much, Sophie. That's very, very clear. And so there is a role for everybody to play here. So thank you very much for pointing this out. I would be delighted to hear Lucinio's views on this, on how do we ensure that our green investments are really green?
Well, I fully agree. That's the problem. I think the taxonomy has been it's a huge step towards certainty and transparency. Beginning, we said we all want to be green, but you have to define what green is, and I think that's been a huge step forward. Although there's still much to do, and I think that as Sophie was saying, it's important just to ensure proportionality and to ensure that small entities and SMEs and all that can just participate and of course we have to avoid greenwashing, but we have to make the processes as simple and as possible. Just if we increase complexity and just we just taking out of the market lots, just huge amounts, and then in countries like Spain, which we have just a huge SMEs population, and very small SMEs. And if projects are just in order to get finance, green finance, and in order to qualify as green finance, you have to just to fulfill so many things that just make it impossible for in terms of your management of the process. That's going to be complicated. So I think just we have to, the best is the enemy of the good, as some people say, and we have to find that balance. And that goes as well just in the development of for instance, the European Green Bond principles, which we're working just with and we are increasing in terms of just ensuring that we do not fall into the greenwashing. Just that we increase certainty, transparency. Just we are just including in travel verification process, just as opposed to the IGMAS, just one process. So I think we have to find a balance. Although in any way, I think that we have to find that balance, and we have to make sure that we are able to finance and just to give possibilities to the transition, to the companies that are in transition. It's either green or brown, but you have different levels and different shades of green, different shades of brown. And if we just focus on the maximum and just giving us, as Ricardo was saying, the time constraints that we're having, because I think we will just find problems in the selection of good projects, in the absorption capacity, and in terms of just being able to process all that information in the limited times that we are approaching. In particular, in countries such as Spain, France, Italy, Greece, in which the amounts of very small SMEs are very high. That's where I think that national promotional institutions can play a role as well. I think we could just help that transition and just to help to identify the green projects and just to help the SMEs to go that way. Just as a final comment, I think the green taxonomy, just European taxonomy, and the working of the European Green Bond Sustainable Green Bond principles. It's a great step forward, but we have to make it quick, because otherwise it will not happen. And we have to make it just of course clear and transparent, but also feasible for us as SMEs and just small entities.
So if I and correct me if I'm wrong, if I was to summarize what you just said, in the spectrum between getting things right and getting them quickly, you would rather err on the side of being quicker, because we need to get started. Is that appropriate?
Well, I think that's an oversimplification, but I think but just all generalizations are false, including this one. But we cannot get is just through to paralysis through analysis. That's the idea. And sometimes we just in European sense we just run the risk of just having and we haven't got the time. And of course there are just time constraints and identification of just constraints. And we have to be, I think, pragmatic, and we have to ensure that there's no greenwashing, and ensure that the taxonomy is clear and just it provides the necessary certainty. Because if financial entities have no certainty that they're just going to what they're doing is going to be qualified as green, the green market will not fly. And we need the public-private coalition, because public funds, as big as they are, will not be sufficient. Will be sufficient for the ambitions of our green trust.
No, but it's interesting that you say that. And in fact, the promotional bank, because you have experience, because you can absorb risk, and because you have the long haul as your objective, can really help ensure that this urgency that we have is not necessarily compromised. It doesn't compromise the objective, right? And I think because you are large players in this market. Ricardo.
Well, thank you, Maria. How do I see this? Well, the IBA, along with the other national promotional banks, have been for now some years working first on the ICMA agreement principles, and then participating in all discussions in Brussels that brought to life the taxonomy. And I think the taxonomy is critically important, and it's a big leap forward. In fact, it's such a large step as the document of the taxonomy is, which is a large one. And of course, that this creates a big challenge depending on the expertise and ability of each of the market participants. Well, first, if you want to bring private money to the green bond markets are institutions, are governed by a set of rules, and they are depend on how much these rules are respected to provide certainty. And that's the only way a market works. Nobody invests if they don't know where their money is being used, being it in the stock market, being in the forex market. Well, maybe cryptocurrencies have challenged a bit what I'm just saying, but that's another topic. So we need to have rules that are clear, that are respected, that are enforced. And that's the only way investors would prefer to bring money to the green bond market instead of investing in regular bonds. In order to have this, we need to be sure that the taxonomy is respected and that the green bond standard is utilized by everybody, and that we don't have 50 shades of green. We need to have a dichotomy between what is green, what is not green, and then we may make the green definition evolve over time, because this is a climate transition. It's not a climate revolution. Revolutions in our world, most of them, or I would say all of them, ended very badly. So let's make this a transition, but the transition needs a path, and a credible path. What we've done at the EIB was approving the Climate Bank Roadmap in 2019. Meaning and implying that from 1st January next year onwards, all our operations are Paris aligned, meaning that all our operations follow the principles that either they are green, and the target that we are putting to ourselves is that half of our fundings for green projects or half of more of the funding is for green projects from 2025 onwards. We are at 40%, so we have essentially 3 years to climb 10 percentage points, or the rest of the portfolio, the new portfolio, follows the do not significantly harm process. So that's the first commitment that we have. Then we went also through the Paris alignment of counterparts, and we have announced this during the last COP. And the Paris alignment of counterparts, it's not a simple thing, because essentially it's looking at your counterparts and say, look, You can bring me a very green project, but if I'm financing you and at the same time you are doing brown activities, I will not finance the green project, because by financing the green project, money is fungible and financing brown activities. So in a sense, there is a greenwashing process involved. And this implies that we have a constructive approach vis-a-vis counterparts. What are we requiring? We are requiring all our counterparts to put forward credible decarbonization plans that ensure that they converge to net zero by 2050, and that they have a clear time path that is public, that is auditable, and that can be verified by market participants. Of course, that for bigger players, this is something that most of them already have it, and they are implementing. When it comes to smaller firms, this is much more difficult. When it comes to oil and gas sector, this is quite demanding, because we are demanding that they have a monotonic decline in the decarbonization. And this implies for oil and gas companies that they reduce their output from the next year onwards, which in some cases is not compatible with their plans. And this will kick out, or at least will not make eligible, some counterparts for the EIB. And it's something that, of course, it's a challenge to our business. But we think that's critically important. Can this be done by all the national promotional banks, all the international financial institutions? Well, I think that in this respect, we are, as far as I'm aware, a leader. We are the first doing this. I'm sure that most of the NPBs will go in this way. Let me see that this appetite is something that is more European, and when you see other parts of the world, there is a different approach, which is not something very helpful, in the sense that this creates kind of a lack of level playing fields on the one hand, and might lead that our convergence, and this needs to be at global level. Global means the whole globe, might be challenged. But I think that Europe has all the conditions to fulfill its part and to move in this direction. When it comes to the greenwashing, well, I think that we need to prevent it at all costs. We need to be very clear on that. It's very important that in the context of RRF, part of the funds of the RRF are being raised in the market by issuance of green bonds by the Commission. It's extremely important that these green bonds are really green, and that are in fact connected and linked to projects that are green. And I think that the key challenge, and it was already alluded by the previous speaker, when it comes to this small loans to SMEs, I think, of course, that we need to have an approach that is practical. It's not practical to implement the same type of scrutiny requirements and eligibilities to a big company and to an SME. This is not something that is devoted to success, and we need to have a framework by which we assess the portfolios of SMEs in the bank portfolio are green, and how much of green investment is there. And there is a lot, because many firms are doing their job, small and medium firms, but the reporting, the eligibility standards need to be adapted such that they are affordable by SMEs. This is something that I believe is very important. Thank you.
Thank you so much, Ricardo. I think actually you've actually alluded to one of the questions that that is coming from our audience about your views on the COP26. But I think you summarized it, I think, quite well in terms of what Europe can do, what others can do. There's elements to be said about fair transition, and everybody have to do their own part. So if you want to comment on COP26, please do. But I'd like to bring two more questions here that I think are important. One has to do with tools, and Richard Firth is asking, does the panel consider that derivatives will make a significant contribution to green finance? And I think that's, if we can talk, because it's a very practical question. And then there is one more question by an anonymous, which I think is a general question, but it would be interesting to hear your views on the risks that the economic situation will force governments to cut spending and therefore cut spending for progress on decarbonization. I mean, do you think that this is do you feel there is a realistic risk, or that can actually happen in view also of COP26 and the commitments, which, you know, we just said Europe is very much committed on this, but there's also legacy issues. We're coming out of two crises. Somebody said that, you know, companies are indebted, countries are indebted. If we're also going into a fiscal consolidation necessarily to try and reduce debt, do you think that our green investments are going to suffer? Perhaps I can start with you, Sophie. Pick on any of it. There's a lot here, so I'm not expecting you to answer everything, but pick on the things that you care about.
Okay, thank you, Maria. I will react first to your second question concerning the cut of public spending, and indeed there are fiscal constraints, and for sure there will be some spending at later or sooner or later, but that's why we consider that it is really important to develop first financial instruments, and not only budgetary spending, classical spending for the national or for the public authorities. It is important for the public authorities to try to leverage on national promotional institutions, but also on other private investors, because this is clearly the way to cut spending, but also to keep on with the efforts in terms of decarbonization and green transition. For instance, when you promote what we call blending, it's a way to be very efficient, but with a limited amount of public money, because you have a small amount of grant completed or with financial instruments. So I think it's a way to solve the dilemma we are facing between cut spending and the necessary efforts in terms of green transition. I have to confess that I will have some difficulties to answer concerning derivatives, but I wanted to put forward another tool which is really important and which we use at CDC, and I think that we did not mention it in the previous discussion. That is to say, the shareholder dialogue. National promotional institutions invest in equity, and so we are shareholders of companies. And of course, as Ricardo explained, for EIB, we have a low carbon policy, and we exclude some brown activities. So we sell some of our shares when it comes to brown activities. But of course, there are also gray activities. And in this case, we consider that for the sake of transition, it is important to dialogue with the companies, for instance, in the oil and gas sector, to try to get them to a greener activities, or to greener sources of energy. So what we call engagement, shareholder dialogue, is also an important tool when you are a long-term investor, because we are shareholders, we are investing for a long period of time, so we are a partner for the companies, and it gives us leverage on their decisions, on their strategies. And I think it's really important for us to use this financial and maybe political or governance leverage on companies to accompany the green transition.
Wonderful, thank you. Lucinio, any comments on the tools and of course on the risks, but the tools would be interesting also from your Spanish perspective.
Well, I think that regarding derivatives, I think that derivatives have got a bad name. But derivatives, it depends on how they're used, and that they might be a very efficient tool to deal with risk. And risk is one of the things that and the risk-bearing capacity is one of the things that the market's going to need. So it depends. I mean, I think the derivatives per se just could be well used, could be an efficient instrument if they were well used, and of course controlled and all that. And of course we all remember the problems we've had. But in terms of the additionality, subsidiarity, and just the possibilities and the new environment, the post-fit environment will just lead towards fiscal consolidation, and in fiscal consolidations, just the urgent takes priority over the important. And what happens is that perhaps just some legacy expenses and social expenses might just take over the possibility of spending on the real long-term important issues. Of course, social issues are long-term and crucial, of course. I think that's a possibility, and that's one of the places where national promotional institutions can play a role, as we said before. And we have to provide additional capital, and we have to I think we have to adapt. And I think that national promotional plans have shown their ability to adapt to changing conditions in the market. I think that we'll continue to play this counter-cyclical role, and just in every market there might be, and Ricardo's put it very well. Just our role is either to help markets that do not work efficiently, because either there's lack of liquidity or financing, or just risk or capital, because that might be just a possibility, or create a new market, and just by developing, just taking in, bearing, sharing risk and all that. I think that Sophie was right as well. Just I think that not all investments, not all money that can be put into these green transitions are going to be public funds. It will have just because they will not suffice. And just the role that we can, sometimes the national promotional banks, what we can just provide is that the things that are just the crowd, allow the crowding in these private investments, be it just risk-bearing, risk sharing, and just investment in equity and some other things. So that's one of the challenges, and it's I mean, we've seen that with the fiscal consolidation, we've just gone through a very difficult situation, and of course the recovery will not just happen like this, and there will be short-term, medium-term, and long-term. And the difference between the short, medium, and the long-term is when the effects start to appear, not when we start working. We start working today for
yeah. Thank you very much, Lucinio. That's great. And I'm actually aware of the time. So Ricardo, you have the last word on these questions. And in particular, I would be interested to hear you on the instruments, as well as the risks, of course.
Okay, thank you very much, Maria. Well, first on the financial instruments. I think on the financial instruments we can offer, as Sophie said, financial instruments that allow for smart management of the RRF funds, such that you can use RRF funds in a way that they benefit from blending of grants with lending, such that if we can use the grants to take a first loss piece, we can leverage a huge amount of lending, such that we magnify the power of the RRF funds. And that's what you're doing. In fact, for the time being with Greece and Italy, but hopefully with many more countries in Europe in a short time period, using a mandate by which the countries give us a mandate to manage part of the RRF funds. Using these RRF funds, we try to build the pipeline, bring the best projects, do the reporting, ensuring that the projects comply with the RRF eligibilities, and using our lending on the top of the RRF funds to have a bigger impact than what the simple utilization of our funds directly works. We do this in both ways, either directly by dealing directly with the project promoters, or if we go to the SMEs and if you want to have a more granular dispersion, than going through the financial intermediaries. So that's what we have defined under our umbrella. Then on the question on derivatives, I think it's a very nice question. Let me answer the following way, as was said by the senior. I don't see any reason for derivatives not to make a contribution. Derivatives are not good or bad for the contribution they do for green or not, but by the way they are utilized in the market, and they are very efficient risk management tools. Just to give two examples. First, it's not, maybe you can call it a derivative or not, because the discussion. Germany, some years ago, issued green bonds with strips. What's the big novelty on green bonds with strips? You have green bonds that have green strips. This allows for regular bondholders to buy these green bonds and strip the green strip, transforming a green bond into a regular bond and not losing the value of the strips. So this allows them to benefit from the greenium and still have a bond that is very liquid because can be traded in the same market as you trade a regular bond. So if this strip is a derivative or not, maybe it's something that can be discussed, but definitely it's something that is value created by green in a bond that can be turned into a regular bond. Second, and this is most close to my work at the EIB, if you want to have a transition, it needs to be global and fair, and we need a just transition. The just transition can't be only inside you. We need to have also EU supporting the just transition in other parts of the world. I mean, in the developing countries, but also in the EU neighborhood, being in the western, the eastern neighborhood or the southern neighborhood. And deploying in these countries, you need to deploy in local currency. To deploy in local currency, you need to cover the forex risk. So the only way the EIB can use the AAA rating to deploy funds to the neighborhood countries in local currency, keeping the price, is by using derivatives that cover for the foreign exchange risk. We don't run foreign exchange risk, we need derivatives. So these are just two examples how derivatives can bring value. If they can destroy value for this utilization, well, we know it from the history. I would not claim the opposite, but that's as most things in life. If you use the wrong way, you get the wrong results. But that's finally, and to conclude, can we have a stress on, can you have risks for not investing enough due to fiscal consolidation? Well, not pretending to be offensive or unpolite, I'll start by saying that an apple is an apple, meaning that, well, if a country is over-indebted and if it creates more debt, it'll have problems if it goes unsustainable, being it for green investment, being it forever. So this means that if a country that is a very high debt level takes a huge amount of debt level for doing additional green investments, it will not go green, it will go bust. So meaning that climate sustainability, financial sustainability, economic sustainability need to go together.
Yeah.
Taking this to where we are and from principles to the practical life. Next year, there will be a discussion of fiscal rules on the most likely we'll have the fiscal rules in Europe back into action in 2023. There is a discussion of the fiscal rules that started before the COVID, that was interrupted during COVID or at least delayed. And in 2022, we'll discuss the green rules. And I think that we are Paris aligning most of the policies in Europe. So we need Paris aligned fiscal rules. ECB is discussing green monetary policy. So I think it's time for leaders in Europe to discuss the fiscal rules in such a way that they favor the climate transition. And they have the big opportunity next year. How to do this? We have the taxonomy to define what is green, what is not. We have rules, and we have all the instruments to define how to create a proper incentives. So it's just do it. Thank you.
And with that, do join us next week when we do discuss how to redo the fiscal rules precisely and precisely keeping the objectives. Look, thank you very much, all three of you. I will not attempt to summarize the results. We're already over time anyway, but this has been extremely interesting in helping us and helping our audience understand the role that you can play in a very big, important transition for the economies, the green transition and beyond. We haven't really talked about the beyond, but I think this was enough for today. Again, Sophie, Ricardo, Lucinio, thank you very much for giving us your insights and hope to see you in one of our events in the near future. Thank you and goodbye.
Thank you.
Cheers. Bye.